Welcome back to my channel, guys. It's Dennis from Simplify Investing. Today I want to talk about good almighty Apple, ticker symbol AAPL. As you can see here, the company has a market cap of 1.92 trillion. They actually hit a lot above 2 trillion market cap, which is the first company to ever do that. Apple was also the first company to hit 1 trillion. Then I believe Amazon and Microsoft did come second and third. But as you can see, they are very profitable, an EPS of $3.30. PE ratio is a little bit high, but again, you're thinking about Apple, right? Apple's tech, all tech is going to be trading at a little bit of higher multiple than a brick and mortar retail store, etc. This company has a true high barrier of entry in the tech world, right? Anyone who's trying to get involved into tech, it's very hard for you to take the market share from Apple. I think that's something really important to remember because of the power of the brand. But one thing I do want to talk about is just tech overall, right? NASDAQ tracks the 100 companies, all tech companies. We are experiencing a huge pullback in tech right now. Tech got pretty overvalued at the peak of it. As you can see here, it hit just over a little bit over 12,000. Right now, it's at 10,900. So yeah, I do want everyone to keep in mind, it is very possible that if you do invest today in Apple, short term, you might not do so well. But I want people to consider this stock as a long-term investment. As you can see, we taken a really big correction in tech overall. We're down 8.59%. Now, a lot of people may look at that and say, hey, that doesn't look like all that much. But in reality, for an index to fall 8.5% is a lot. Just to compare, this year is not really a good example just because there was a huge run up in tech. This isn't normal. This doesn't happen every year. I just wanted to bring up 2018, for example. As you can see, the NASDAQ's return in 2018 was negative, actually, 4.36%. Now, there was a correction at the end of the year, but it still wasn't as large to really be significant, right? I just use that as a comparison. Next up, I wanted to talk about Apple stock, the chart, right? They did also correct when the market whole corrected. They were trading at 134 at their peak, and they dropped all the way down to 107 when they bottomed out pretty much. Tech has recovered a little bit. There was news earlier this week that there may be another round of stimulus. So I think that really excited investors and gave them a little bit more optimism. But we still have the election ahead of us, so it's still something to keep in mind. We have a lot of headwinds. We have Brexit still going on, the trade deal that nobody really knows what's going to happen at the end of the year. So that's also something to keep in mind. Next up, I wanted to talk about Apple's balance sheet. They have one of the best balance sheets in the stock market. It really is incredible. But I also want to point out that I don't want you to focus necessarily on the balance sheet for Apple. Apple's more of a growth company. And it's a tech company at the end of the day. So every tech company pretty much has a pretty good balance sheet unless you're a startup or you're a young company. So I wanted to talk about the total assets. They had $338 billion in assets. Their cash and cash equivalents is $100 billion. And their current liabilities is $105 billion. So if you add up their receivables and their cash, they'll be able to pay off their current liabilities with no problem. They also have very little debt if you consider how much total assets they actually have. They have about $108 billion in debt. But again, I don't want you to focus too much on the balance sheet of the company. They do definitely have a lot more going for them than just the balance sheet, right? Next up, what I want to talk about is Apple's growth rate. I think this is really important to factor in whenever a company starts getting so large. So many companies like Microsoft, Amazon, Apple, all these large market cap companies, when their revenue starts increasing so much and the numbers start becoming so large, they start dealing with the law of large numbers. What that basically means is it's harder for them to grow percentage basis once their revenue starts increasing so much, right? That's something that all these large mature companies are dealing with. But as you can see here, Apple's pretty much an exception. Year over year, revenue growth is about 11% for the company, while the industry average is about almost 4%, 3.87. So it's really impressive. Their quarter over quarter is down, but I'm assuming that's because of the whole pandemic that's going on. But they're still doing extremely well, and I think that's something to keep in mind. Next up, what I want to talk about is smartphone market share. So right here, you can see the top 5 smartphone companies around the world. As you can see here, Huawei takes first at 20.2%, Samsung takes second at 19.5%, and Apple takes third at 13.6%. Now, I just brought this up to bring to your attention that Apple isn't the biggest player in the smartphone market, but that actually might come to benefit Apple. I believe what Apple's thinking is they want to make their products more affordable. If you have noticed in the past, they are lowering their prices quite a bit. About 2 to 3 years ago, we did see a huge spike in iPhones and just all their hardware devices. They did experience a spike in price, but as of right now, I think what they're thinking is that they want to get their phone or whatever their product into more people's hands in order for them to grow in the ecosystem. So I do want to talk about the iPhone SE. I think the iPhone SE was very successful. It did get a lot of new users to Apple, which at the end of the day is great for Apple, because you might start with an iPhone SE, but you might eventually upgrade to an iPhone X or an iPhone XR, 11 or 12. But not only that, you also might be able to get an iPad because you want to get involved into the ecosystem. And once they have you trapped into the Apple ecosystem, they really have you locked down. You start off with the iPad, then you get the MacBook, then you get the Apple Watch, and you're stuck in this ecosystem where you really can't get out, because if you get out, if you get a Samsung phone, then you can't really have your Apple Watch work with your Samsung phone and your computer and etc. So I think what they're doing is very smart. Everybody who has an iPhone at this time and who can afford it has one, right? But the people who can't really afford it aren't really in the means to pay $1,000 for a smartphone. So that's where the SE products come out, and they really make their shine, right? They have the Apple Watch, which just released, the Apple Watch SE, which I think is going to do extremely well, especially overseas, and also the iPhone SE that they already released, and it's done really, really well. Next up, I also wanted to talk about services. This is something that Apple's been focusing on for a while now, but the latest presentation that they just came out with when they announced the new Apple Watch, the Apple Watch SE, and the new iPad Air, they did talk about some new services, right? So as you can see here, they're doing bundles now. So on the left, you have an individual for $15 a month that includes Apple Music, Apple TV, Apple Arcade, and some iCloud storage. Family plan is about $20. So, I mean, if you have a household of 2 or 3, it's definitely worth it. I believe 4 is the max you can have in a family plan. You have Apple Music, Apple TV, Apple Arcade, and you also get a little bit more data in the iCloud storage. But this is the one that really interests me, the Premiere. So if you did watch the event, they actually announced Apple Fitness. It's basically a way for them to compete with other fitness companies. I think they were specifically targeting Peloton, but it's a little bit different than Peloton. They don't have any hardware, they don't have any equipment. They just want you to do workouts at your home with the least amount of actual products or weights available to you. So I think it's pretty interesting to have different instructors that they hired, and you just basically watch the video on your phone and just follow along. So this right here is the $30 plan. You get Apple Music, Apple TV, Apple Arcade, iCloud storage. I think this is 2 terabytes, Apple News, and this right here is Apple Fitness. So I think they're very much focused on Apple services. They have been for the past year or two, and I think that's a great direction because they've already grown their clientele so much that I think their focus is to just keep growing revenue by offering them more services. I did also want to talk about Apple Fitness. Apple Fitness was released when they came out with the new Apple Watches and the new Apple iPad Air. So basically what it is they have fitness instructors that are pretty much influencers on social media, and they want you to basically work out with these instructors on your phone, and you could just do this from the comfort of your home, and they're trying to minimize the gym equipment required. And I think this is the right direction. With the illness that's going around, I think that working out from home is here to stay just for a bit, right? I think that this is the right direction for the company. I think a lot of people who have people that are immune to this illness, they might not want to go out and risk themselves at a gym. And I think this might be the right move. A lot of companies are coming out with similar fitness products. I mean, we have Amazon that came out with a new bike that's trying to compete with a Peloton. So I think this is definitely headed in the right direction. And again, it's a subscription base of revenue. So this is awesome. And you could see here, one thing that I really liked about this was that if you buy an Apple Watch, you get 3 months on them. So what that means is if you buy an Apple Watch, you get 3 months for free. And after those 3 months, you're most likely going to get adapted to the service, and you're just going to wanting to continue to pay for it. And I think that's a great way to get people involved into a new service. I also wanted to talk about the success of the iPhone SE. Here you could see prices have dropped, unfortunately, due to the SE, but I think the market share that they gained due to this has definitely benefited the company way more, right? And they did come out with a iPhone SE 2, which I also think helped the company as well back in April. Next up, I did want to talk about the ecosystem. I did previously talk about this, but I mean, once you get involved into this ecosystem, it's really hard to get out. I mean, first off, what people usually start with is the Apple iPhone, right? Then you get into the iPad. Then you get into the MacBook, then you get into Apple TV, and then you get into the Apple Watch. And by then, if you can't leave this ecosystem. Then if you leave, if you change your computer, if you change your iPhone, you won't no longer have the ecosystem all work so nicely together. And I think that's what one of the barriers of entry, or barriers. Lastly, what I wanted to talk about is Apple's involvement in the S&P 500. So as you can see here, this is the S&P 500, all 500 companies, and they're listed by weight. If you didn't know, S&P is actually weight-based, not price-based, as like the Dow is. Dow is actually price-based. So what this means is all these different companies, their weight is determined by the market cap of each company. So for example, if Apple right here has a 6.46 weight. Let's see, MasterCard has 1.077. So MasterCard would have to move 6% in order to the same thing to the S&P 500 as Apple would if they just move 1%. It's just the way that they actually calculate how many shares they buy of each company determined by their market cap. So I think this comes out to benefit Apple in the long run, because the S&P 500 traditionally goes up, over a long period of time, and this comes to benefit Apple just because of their heavy weight. The more that the S&P 500 buys of the Apple stock, the more Apple stock goes up, right? Lastly, what I wanted to talk about is just Apple overall, the brand. This company has a cult following similar to what Lululemon or Amazon has. I mean, these people that buy Apple products love Apple products. They have no other place to go. This is the company that they love, that no matter what happens, they will stay with Apple. And that's, at the end of the day, something I just want to own. Now, don't get me wrong. There is a lot of headwinds short term. I mean, we have the election, like I previously talked about, Brexit. We have maybe rising cases. We might have a second wave of COVID, but I still think long term, I think Apple's a phenomenal company to hold. I would love to hear what you guys have to say in the comments down below. And again, if you enjoyed this video, I would really appreciate it if you could hit the like button and also subscribe if you're interested in more videos like this.